Have you ever wondered how to know if the market is in a correction before it's too late? In our last video, we showed you how the Nasdaq 100 ETF, QQQ, had just broken out to a new all-time high. But the landscape has changed since then, with the market currently in a pullback, and it's leaving a lot of traders wondering, is this pullback the start of something greater, or is it just a little dip within the uptrend? In today's video, we're going to show you a simple technical signal you can use to help you determine whether or not the market is in correction mode. And if it is in correction mode, we're going to show you how to trade that pullback with what we call pullback setups. And stick around to the end of the video, because at the end of the video, we're going to show you some actionable trade setups that could potentially be setting up for pullback entry based upon the strategy that we're going to show you. I'm Darren Wagner, the head of MTG, and in just a moment, we're going to turn things over to Rick Petticelli, the head stock analyst at MTG with over 20 years of trading experience. So before I do that, be sure to like and subscribe to ensure you receive more great content like this. And remember that nothing we say in our videos is financial advice. It's simply our interpretation of what the charts say. So let's see what the charts say.
What's up, MTG Tribe? My name is Rick Petticelli of Morpheus Trading. And in this video, we're going to share a few tips on how to avoid getting chopped up during a market correction. And hopefully this video will help you navigate current market conditions with the Nasdaq now entering a corrective phase. So first up, how do we know we're in a market correction? We like to use the combination of the 8 and 20-day moving averages. And that could also be the 10 and 20, just really depends on whatever you like to use, personal preference. 9 and 20, 8 and 20, 9 and 21, just as long as they're around that area. So what we're looking for in a strong uptrend, the price action's holding above the 8. That's a very strong uptrend. Really can't argue with price action there. It's going higher and everything's looking pretty good usually. When there's a break of the 8, we'll often see a pullback potentially to the 20-day EMA. And that's the market in pullback mode, and price action will pull back to the 20. However, when the price breaks the 20-day EMA and there's a confirmed break the following day where price trades below the day that closes below the 20-day EMA, as it did on Thursday here, we now have the market, the Nasdaq 100, in correction mode. And it's our experience trading over the past 2 decades that, bad things tend to happen to the market below the 20-day EMA. And while current market conditions are still overall pretty bullish, we never know what will happen to the price action once there's a break of the 20-day EMA. QQQ could sell off back down to this 383 level, or it could reclaim the 20-day EMA on Friday, which would be a bullish sign. But currently, the QQQ is in correction mode here, below the 20-day EMA. For us, that's a warning sign to take off some exposure if we haven't done so already, and to avoid putting on new positions unless something extremely compelling develops in a stock that we really want to get into. And we'll discuss that in a little bit more detail later on in this video. So we know that the Nasdaq 100 is in corrective mode. The S&P is getting there, just closed at just below the 20-day EMA on Thursday. A break of that day's low on Friday would confirm the break of the 20. And as I mentioned a bit earlier, that would suggest further weakness unless the price action can reclaim the 20-day EMA within the next few days. That would be a positive sign. And we also have to remind ourselves that this was a pretty sharp run up in price action. So to have a few weeks of chop here would be ideal. And we'd have to assume that that would involve the price action taking out an obvious low or the 20-day EMA. There's got to be some sort of price action that scares away investors for in the short term, especially those who participated late in the rally and loaded up on exposure up here. So there's we always need to see some pain first in the market before it bottoms out. So QQQ is in correction mode. The S&P could be. Let's go to the mid-cap S&P mid-cap 400. Also, as of Thursday, in corrective mode below the 20. And the small-cap Russell 2000 in correction mode below the 20 as well. Borderline, though, it's still within Wednesday's candle, but potentially entering corrective mode. So looking at these charts, we see that there's the potential for the market to be under a few weeks of selling pressure, having to digest that sharp run up. And so right away, we want to step back. We go from being aggressive while the price action is trending above the 8 and 20. We want to sitting, on our hands, not doing much, just monitoring the price action, scanning every night, keeping up with new setups that could be in play. Which leads us to the second tip, which is we know we're in a market correction. So now what do we have to do? We have to be patient and wait for valid buy points to develop. What's a valid buy point? Well, that depends on your trading system. But for us, that's, we're either looking for the price action to chop around in a tight range, depending on the chart, and look for a buy point to emerge off the 8 or 20-day EMA. Or with the market pulling back in, we're more likely to see pullback setups develop. And, pullback setups are generally something where we have a reversal candle off the 20 or 50-day moving average. So we really want to be patient with the price action below the 20-day EMA. And if these indices happen to reclaim the 20 within the next few days, that would be a positive sign and a reason to put on some more exposure. And so one, we know we're in a market that might be turning tough for new long positions. So we're going to have to be a bit more patient, which is two. Wait for valid buy points to develop. And three, we got to take advantage of weakness in a strong market and look for leading stocks that are pulling back to obvious or logical support areas such as the 20 or 50-day moving average, or prior resistance levels that are in our support, or even possibly prior support levels that held up in the past. And so to go into a bit more detail here, we're going to bring up a chart of SHOP, which reversed on Thursday on a pickup in volume, a bullish sign. And although the price action didn't touch the 50-day moving average, where there's support from a prior high and the 50 around 68, the price action did bounce off of prior support levels and the prior resistance of the base high. So if the base high and prior support at 71, the price action bounced off of 71. So this is what I mean by waiting for some sort of pullback entry to develop, taking advantage of short-term weakness in a strong uptrend. If Shopify pulls back in on Friday, one could look to enter around 73 with the stop beneath the reversal candle low on Thursday. And this reversal may or may not hold. We don't yet know. So that's something we have to keep in mind because market conditions are not ideal here with most broad market averages below the 20. So if we were to participate in this trade, maybe we take a smaller size with the idea that we can add size as the price action confirms by moving higher. INTC is another potential pullback entry here. Over the past 2 days, there's not much to do. Price action is just pulling back. On Thursday, we have our first sign of a reversal candle. The price reversed just shy of this prior high, which is now support. And if the price action can reclaim the 28-day EMA and hold, it could push higher next week. But again, we're not looking to do much of anything while the price falls back down. And then when we see a reversal candle, that's when we can begin to take some action. And again, whether we go in with half size or quarter size or full really depends on market conditions. And with the market not ideal, maybe that's a quarter or a third position to test the water. Next up is Datadog. And again, there's nothing much to do until we see some sort of reversal. And on Thursday, there's an undercut of a prior low and then a reversal on Thursday. So here's the undercut of the prior low on Wednesday. And then Thursday's price action dips below Wednesday's low and then reverses higher on a slight pickup in volume. So DDOG is something that could potentially be in play on Friday, especially if it pushes through 114. And the final chart of the night is ANET with a pullback entry here with a reversal candle off the 20-day EMA. If the price can work through this 233 area, it could potentially be in play. So while the price was sliding lower, there was just nothing much to do. No reversal action until Thursday. And again, we don't know if the price will push higher from here. It could just chop around on Friday and then head lower next week. So the idea here is to keep an eye on some of these stocks on your watch list for pullback entries, and depending how market conditions are, if these patterns triggers, may want to grab exposure in one or two and see how they hold up. Just have to be patient here, wait for valid buy points to emerge and test the water with some small size and see how those setups hold up. And if they push higher, great, we add more exposure. If the market holds up and reclaims the 20-day EMA, then we can become a bit more aggressive as well. All right, so that's a wrap for this video. Just to recap, how to avoid getting chopped up during a market correction. What we want to do is first know that we're in a market correction. Are most broad market averages below the 20-day EMA? If yes, then we are. Be patient. Wait for valid buy points to emerge. No need to rush. The market may pull back for 5 to 7 days or 2 to 3 weeks. We have no idea, but once the price action is below the 20-day EMA, anything can happen. And finally, we want to take advantage of the short-term weakness in the overall bull market by buying stocks that are pulling back to logical areas of support, such as prior support levels or the 20 or 50-day moving averages, and waiting for reversal candles. That's important. All right, please like and subscribe to receive more great content like this. And if you'd like to learn more about our style of trading, head on over to the MTG website and click on Stock Picks or Crypto Picks. Well, thanks for joining me, and always remember to trade what you see, not what you think.